Good evening. I am going to be in Dubai in the last week of February. My team wants to do an event between 24th and 25th of February. There are going to be two events, one on the 24th and one on 25th. Those desirous of attend the event, not only from Dubai, Abu Dhabi and Sharjah, but from the rest of Emirates, can contact my team at the phone number given below. The WhatsApp number is also given below. There's an email ID and there's a Google form. You can use any of these methods to connect us, and my team would be glad to help you. See you in Dubai.
Hi everyone, welcome back to Be Rich. Today I want to talk about Tata Powers. By the end of the video, you'll see what I think about Tata Powers and you can come to your own conclusion about investing on which Tata company you can look at instead of Tata Powers. Yes, Tata Power is a great company. There's no denying it, right? They have a huge growth prospect ahead of them. Because of Tata Motors getting into electric cars, and there's a huge impetus in India on electric vehicles, and there's a huge demand for power in India for electricity. The company's future looks promising and they're investing. And even their CEO recently came out and he was talking to the press and he had said that he'll benefit. The stage goes for multiple suppliers. That means each state opens up for multiple suppliers from different power suppliers. Revenue streams will grow for them. Then he had spoken in great length in Business Standard. He'd done an interview about domestic and rural consumers also driving power demand. With consumers, forget big industries historically known to consume a lot of power. Consumers like you and me are increasingly demanding more power. Rural areas are demanding more power. So he says there's huge growth opportunities for them. While there are challenges in power distribution, there are also opportunities, is what he has said. So it's a very nice article. Those of you can who have time can read it. And he talks about power generation and the hydro projects. So all these things are great. And he talks about the Red Sea crisis also. Says the effects of the Red Sea crisis on the coal market, and that of course will impact power. It's a nice article. But of course, we're looking at it long term. We're looking at value investors. So if you look at it in terms of value investors, we have to look at our key metrics. And if you're looking at apples to apples, that is comparing as an investment in terms of returns and opportunity for growth in the long term, we always have to see, is it the right entry point into a share or into a company? So the reason why we look at that is because then you have to compare. Maybe there's another company at a better entry point. So if you look at it in terms of value, we stay within the Tata group itself, because the reason why we're looking at Tata Power is we want to enter into a Tata company. We believe in their brand and we see growth there, Tata. So within that same ecosystem, then you can look at something like Tata Chemicals. So let's just compare apples to apples and see Tata company. If you're keen on buying a Tata company, why maybe you can look at Tata Chemicals instead of Tata Power. So if you're looking at price right now, at the time of recording this video, Tata Power is trading at 367 and Tata Chemicals is trading at 959. That could be the main reason why many of you are considering Tata Powers, that, I can get almost 2 Tata Power shares for 1 Tata Chemical share. Yes, I understand that logic. I used to make those kind of mistakes when I was investing too, that I can get 2 shares instead of 1 share. Yes, I get that logic, but you cannot look at it like that. You have to look at it in terms of what is it at PE and is the PE making sense right now. So if you look at the PE of Tata Chemicals, it's at 14.1, while Tata Power is at 34.2. That itself tells you Tata Power right now is heavily bought and you cannot think of entering Tata Power. This is just at a basic level. So even if you want to dive further down, you can see 52-week high and 52-week low of Tata Power. It's from 413 to 182. So you're closer to the highs, right? And if you look at Tata Chemicals in the flip of it, the low was 922 and the high was 1141. So you're lower to the lowers. So it's a better entry point is Tata Power. And if you look at book value, each share of Tata Chemicals is worth 840 rupees, while each share of Tata Power is worth at 94.3 rupees. And the rate of return on investment or rate on Tata Chemicals is 12%, while Tata Power is offering 12.2%. So even the ROCE is at 11.6 for both of them. So when you look at it like that, and face value of the share, Tata Chemicals is at 10 and Tata Power is at 1. So why has Tata Chemicals trading so low then? The question will be begging that is something wrong with Tata Chemicals. The reason why Tata Chemicals is going through what it's going through is in 2019, a big heart of that company was pulled out and removed. which was its coffee and its salts and all its F&B, food and beverages, which was all there inside Tata Chemicals, was removed from there, and they moved it out. When they removed that, the earnings of that whole unit was removed from the balance sheet of Tata Chemicals. So what is Tata Chemicals left with? It's left with soda ash. And right now, soda ash is in a cyclical business. And because of a lot of Chinese soda ash being dumped in the Indian market at a lower price, Tata Chemicals is also lowering its prices to match and to stay competitive. So it lowers their earnings. And the main consumers of soda ash is the soap companies, FMCG companies. And because the demand in soda ash has dropped, because FMCG companies don't need to produce so much of soap right now. So they don't need to produce so much of soap, the supply also drops. But in terms of long term, we all need soaps. Reason why we believe in ITC, we believe in Unilever is why no matter recession, depression, or market is doing fantastic, we all need to use soap. We all need to use FMCG products. So that way, one of the raw materials for that industry is soda ash. So soda ash is going to be required for a very long time until and unless there's some need to replace soda ash, which is not there right now. So if you look at it like that, Tata Chemicals is a much better buy. If you're looking at it as an investment, Tata Chemicals, I would say, is more opportune investment than Tata Power right now. And even dividend yield, Tata dividend yield is at 1.8%, and Tata Power is at half. So your return is going to be much better in Tata Chemicals in the long run if you're thinking of considering Tata companies. And if you're thinking of Tata Power because of the price point, I only have little money, I don't have 900, almost 1,000 rupees to put, then you can still look at Tata DVR. Tata DVR is trading right below 600 right now. Maybe Tata Motors DVR will also be a better fit. This is my idea of why I would. Yes, Tata Power is a great company. I'm not denying it. It has great prospects, not denying it. But if you want to enter this company, I would ask you to wait for a while. This is my consideration for you. I hope you found the video informative and entertaining. And as always, thank you for watching the video. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.